Mortgage Gumbo with Dwayne Stein.
Well, we're going to discuss the fundamentals of credit and how your score comes about. When you pull your FICO score, how and what goes into that scoring. So what I want you to do is really right now, if you want to draw a circle on a piece of paper. Now, if you're driving, just kind of do it in your mind. But if you draw a circle, we're going to make a pie. Everybody likes pie. I don't care if you're into fitness or not. You eat some kind of pie. Okay? So, and we're going to break it down into 5 different components. The largest is going to be, and I'm going to give them out to you all at one time, then we'll go back and cover them. The largest component of your credit score is payment history. That's 35%. So that's more than 1/3, 35%. So that's a big sliver of pie. Amounts owed is 30%. So you've got over 2/3 of your pie is gone on those 2 categories. Length of credit history is 15%. New credit is 10%. And types of credit is also 10%. So as you can see, again, payment history, 35%, amounts owed, which is basically your balance versus your credit limits. And listen, I'm going to get into all of this. Your length of credit history, 15%, new credit 10%, and types of credit 10%. Okay? So now that we've got that piece of pie, let's kind of talk about what each one is. And some of these may be common sense, but I also want to kind of give you some tips on how we can beat this stuff as well. So as we discussed, the largest part of your score is payment history. Okay? So in a nutshell, how well do you pay your bills? Do you have 30 days, 60-day lates, 90 days? Do you have judgments, liens, bankruptcies? And if you have bankruptcies, is it a Chapter 7? Is it a Chapter 13? You know, what about collection accounts? Do you have collections? Those are all what's going to go into your payment history. Okay, so as you get late pays, for instance, if you're doing a mortgage, your payment history with your score, it's going to be affected because if you have a mortgage and you have a one-time 30-day, okay, that one-time 30-day, we could still help you. If you have more than 2 30 days, it's going to be a lot harder for us to find. And in 2 30 days in a 1-year period, it's going to be a lot harder for us to find an investor to secure your loan. Okay? So whether you're looking to refinance or not. Okay? So just want to make sure that you're kind of aware of that. So when it comes to your payment history, listen, regardless of what's happened in the past, we want to make sure. Because let's face it, credit in a nutshell is really just a reminder of bad decisions or even good decisions that you've made in the past. Right? I won't pay that cell bill. I'll show you. Oh, ex-spouse, I'll show you. I won't. I see everybody. When people go through a divorce, it's almost like they both agree, you know what, I'll show you, and we'll both destroy our credit. So we got to deal with each other that much longer. But that doctor bill, all those type of things, those are the things that kind of affect your payment history. So you want to make sure that you keep those current and up to date as much as you possibly can. We do understand that, hey, just because you had a 30-day last month, hey, let's try to get it right as soon as possible. It's a marathon, not a sprint, and then we'll look at other options to improve your score. Okay? Second biggest piece of the pie is your amounts owed. And we're going to spend a little time on this. Your amounts owed, basically, folks, is your balances versus your credit limit. So if you have a credit card that's $1,000 limit, what is your balance is going to determine how your scoring is affected. For example, if you have a $1,000 credit limit, and I'm just using that for simple numbers, and you have a balance of $802, your credit score is not going to be as good on that $802 as if you were at $798. So whenever you're looking at your credit and you're looking at your credit limit as compared to the balance that you owe, try to manage it in 10% increments. Because every time that you drop below that 10%, you get a little bit of a bump in your credit score. If you want to absolutely maximize your credit score, you want to be under 30%. 10% is optimal. 10% is great if you're using your credit cards every month and you're keeping them under 10%. That's great. But you will get max score if you're under 30% on your credit limit. So that would mean on that same $1,000 balance, if you owe $299, you're maximizing that particular credit card's scoring model. Okay? So I want to make sure. That is where, when we're looking at how can we improve people's credit, that is the number one thing that we do, and we're able to get their scores up tremendously. Now, so again, we discussed that biggest piece of the pie is payment history. That second biggest piece we're talking about right now is the amount owed, your balance versus credit limits. Hey, listen, when you come to us, one thing we don't do is we're not going to turn you down. We're going to let you know that maybe right now you're not ready to do this loan, but we're always, with my team, we are always going to look at showing you the path. We're going to show you here's what you need to do to be able to purchase a home in regards to credit. And let's face it, folks, credit is right up there with air and water. So when it comes to one of the things that we can work with is your balances on your credit limits and your credit limits. We can work with you there. We are able to get your credit score up tremendously by working in those departments. That is the number one place we're going to look at. We had a client this past week, we were able to get their credit score up 40 points. So we took them from a 602 to a 642 by them just paying $180 on a credit card. 40 points. So it went from them who went to a bank and told them, nope, we can't help you. They had a coworker who said, give these guys a call. And in less than 5 minutes, we were able to tell them what needed to be done. They had the means to go pay the money, got it done. And in less than, and if you hear these lenders telling you, oh, it takes several weeks and we do what's called a rescore, that's what they hide behind. These rescores, we get them done in 24 hours to 72 hours. So 2-3 weeks. Now, somebody's not in the business of making loans. Like if they're not in the business of making loans, which we are, we have ways to get these things done fast. Because with rates going up every day, we want to make sure that we can get you qualified sooner rather than later. So that's going to be the biggest place. So that's 30%. Let's hop over to length of credit history. This is another area that we could kind of trick the system, folks. But this is where old credit and new credit, this is where this comes in. And keep in mind, old credit is not bad. But please don't follow bad advice that you may get when these folks tell you, oh, or you get so mad that, hey, you know what, I finally paid Sears off. The heck with them. I hate their guts. And you finally pay them off. Whatever you do, don't close out the account. I see so many people get such bad advice and they close out these credit cards that they've had for 15, 10, 5, 20 years. Well, folks, when you close that out, you lose all that history. So that's 15% of your credit score takes a tremendous ding. And that winds up affecting the other 10% when your types of credit. So, folks, when it comes to your length of credit history, old credit is good. You don't want to be running up those bills, but you don't want to get rid of those credit cards. And again, how do we kind of help trick the system on this as well? Guess what? If we need to immediately try to get your score up, and you can't, and listen, you may call your credit card company and go, you can't add years, right? We can't all of a sudden blink our eyes and be 10 years on a credit report. But here's what you can do. You could call mom, dad, uncle, brother who has a good credit history and maybe ask them to be an authorized signer on that 20-year credit card that they've got that you know they pay like a champ. Once they throw your name on there, guess what? You get all of that history. Were you aware of that? We beat the system like that all the time. So you could throw dad's got the Sears. Again, we can't push you 10 years into the future, but we could have you go get on Uncle Johnny's, maybe his little Maison Blanche card for my older listeners. Y'all remember Maison Blanche? Or Mervin's. Maybe you can get on his Mervin's card and pick up that 20 years of history, and guess what? You get to get all that. That's how we help you beat the system. New credit. Are you applying everywhere? Are you out getting a new auto? If you get a new auto, it's going to hurt your credit. Straight up, it's going to ding it. Until you got about 90 days to 6 months of payments, you're going to take a hit. So if you're thinking about buying a house, get the house before you buy the car. Now, if you need the car to get the job to qualify for the house, we understand. Just understand that sometimes we don't want to put the cart before the horse if we don't have to. And also, hey, during Christmas time, when you're going into these places and they're telling you, oh, you get 10% off, new credit, how many inquiries do you have? Do you have a bunch of inquiries? We don't want that. Okay? Inquiries could stay on there up to 1 to 2 years. So when you're deciding to apply for something, make sure it's something that you truly, truly want. All right? So that's 10%. So far, if you're following, 35% payment history, 30% amount owed, length of credit history, 15, and new credit, 10. Last but not least, the last 10% is types of credit. And as we talked about earlier, you want to make sure if you close out that old credit card, that's going to affect you. You got to have a good balance. You got to have a good balance, folks. So you can't have just permanent debt. You got to have secured debt. You got to have that unsecured debt, which is those credit cards. Okay? So you want to make sure that you're managing that properly. That's why sometimes if you call us and you've got no credit card debt, we might have you go get a secured credit card. So listen, if you heard anything on the show today talking about credit or you've been turned down because of credit, we don't accept that over at my firm. Give us a call, 504-207-7600. We'll look at your credit for free. My people are vetted. We know how to tell you exactly what needs to be done, down to the penny, so you can get ready to buy a house.
Mortgage Gumbo with Dwayne Stein.